A very good afternoon, ladies and gentlemen, and welcome to this Sowetan Dialogue in association with JSE Investor Services. I'm Alishia Seckam. I'm a financial news journalist and anchor at Business Day TV, and over the next hour, I'm going to be facilitating what I consider to be a crucial conversation in the context of South Africa aiming to build a more financially inclusive economy. And today, we're going to be throwing the spotlight on BEE share ownership schemes as a vehicle to getting there. Now, on a headline basis, what are BEE ownership schemes? Well, they aim to give previously disadvantaged South Africans the opportunity to own a stake in a company and participate in its growth. There are currently 4 BEE share schemes listed on the JSE, but is there enough of an understanding of them? What are they? How do they work? How do you buy into them? And how exactly do you leverage off the opportunity they're said to offer to the fullest so that it does, in fact, make for a good investment? Over the next hour, I'm going to be in conversation with a panel of industry experts and officials from some of South Africa's biggest BEE share schemes, and we're going to be exploring how to invest in, manage, and grow your BEE share opportunities. Like I said right at the top, the conversation this morning brought to you in association with JSE Investor Services. So before we engage our panelists, I'd like to introduce Carol Crozier, who's Chief Operating Officer of JSE Investor Services, to help us a little bit more officially set the scene. Carol joining us remotely this morning. And so at this point, Carol, I guess the screen is yours. Mm-hmm.
Thank you so much. It really is a very, very special opportunity for us to engage today. I just wanted to say a very good afternoon to everybody. I'm very proud to welcome you to this discussion on unpacking the ins and outs of BEE share schemes listed on the JSE. As a subsidiary of the JSE Investor Services team is particularly excited to sponsor this edition of the Sowetan Live Dialogues. Just as an introduction, JSE Investor Services, otherwise known as JIS, is a leading share registry, custody, and investor services provider. And actually what this really means is that we look after the share registers of listed and unlisted companies. Now, this includes JSE top 40 listed companies, and really it's broken down into about 2 million individual shareholders. We really strive to offer a personal and accessible approach to customer services with the availability of 40 call center employees who our clients are able to call, email, or walk in and have a conversation with. Now, earlier this year, JIS entered into an association with William Radcliffe to offer listed and unlisted companies value-added services, which include advice on how to set up an ESOP or a BEE scheme, financial administration of these schemes, a training of trustees, trust beneficiaries, and employees. So I'm very excited that we have Hartwell joining us from William Radcliffe today on the panel. Now, our conversation will unpack the BEE schemes listed on the exchange, including information about what these are and what their role is in the market. So I would just like to take this opportunity to extend my thanks to the organisers, the presenters, and our panelists, which include our very valued issuers, Yebo Yethu and SAB's Nzele Kabili. And really everybody in attendance today, I really do appreciate you taking the time out of your busy schedules for this very, very important conversation. Together, we can raise employee involvement in ESOPs and BEE schemes, which can contribute to how the companies they hold investment stakes in are managed, operated, and ultimately governed. So thank you very, very much. Back to you.
Thanks so much for that, ladies and gentlemen. That Carol Crozier, who's Chief Operating Officer at JSE Investor Services. Now, springboarding off all that Carol has touched on there, we're going to be delving straight into some conversation. And let me start off with a few introductions. Samira Khan is Company Secretary at Yebo Yethu. Samira is a chartered accountant by profession and has been responsible for corporate governance and statutory compliance of a number of companies, trusts and triple BEE schemes over the years. Also at Yebo Yethu, we have Busi Selwanyana, who serves as chairman of the audit committee. Busi is a chartered accountant by profession as well, and non-executive director that serves on boards of 4 companies, an entrepreneur and former banking executive. Both the ladies joining me on the platform right here live. Joining us from the virtual realm, Hartwell Tuma. He heads the Employee Share Schemes Division at William Radcliffe and boasts over a decade having specialized in the handling of employee share plans and broad-based black empowerment schemes. And then Lucy Mofokeng, who's Share Schemes Coordinator at AB InBev. Lucy has been working with the triple BEE share schemes for the last 10 years and just had the opportunity to be part of SAB's Zenzele Kabili listing on the JSE effective May 2021. At this point, ladies and gentlemen, just a quick reminder, as much as the conversation is going to be happening on this platform right here, it's a platform that we share with you, our viewers. So I'd like you to encourage you to get involved, engage with the expertise we have access to this afternoon by sending any questions you might have through to us via the Q&A box on your screen, and we'll pose as many of them as we possibly can to our panelists on your behalf. For now, let's kick things off and get straight into talking. Samira, I'm going to start off with you because BEE share schemes have been around for several years now. We saw the first of them being introduced in the mid-2000s, thereabouts. The intent, like I said right at the top, to give previously disadvantaged South Africans the opportunity to own a stake in a company and participate in its growth. How are you rating the success of this endeavor so far?
I think, sorry, can you hear me?
Yeah.
Okay. No, definitely. I think BEE schemes have been very successful in South Africa. We've seen a number of these schemes crop up over the years. And really what we've done is we've given the general South African, the man on the street, access into an investment, into a company, usually at a lower price point. It's a good investment opportunity through a more accessible medium where we assist you to trade via call centers, etc. And I think as South Africa moves towards a more financially inclusive country, as you mentioned, this stands truer than ever. So I don't think BEE schemes are going anywhere. And I do think it's up to us to now get involved, to educate ourselves and to start making use of these investment opportunities that are out there.
Absolutely. Well, Hartwell, let's bring you in at this point. And I'm going to be keeping things very broad strokes for now, just getting a sense of where things are at with more of an overarching perspective as we kick things into gear. To what extent is the success of these schemes being impeded, if at all, by the sheer lack of education that's out there and, in turn, understanding of what BEE share schemes are all about? Unmute yourself, please.
Thank you. Sorry about that. Look, I think education is really impeding the growth of the BEE market. In that there's quite a lot of BEE share schemes out there at the moment, but there's very little activity, and it's mostly because of the education. I think when a lot of these share schemes are launched, there's a lot of fanfare and there's a lot of marketing, and because of the structure of the schemes where there are lock-in periods, it really goes quiet, and a lot of the shareholders tend to forget about them for quite some time, and so that you tend to get a lot of shareholders sitting back waiting for the end of the lock-in period so that they can trade their shares. And if we can be honest, a lot of the information that goes out in terms of the documents that go out into the market, they are in very complicated financial jargon. And a lot of the shareholders that participate in these BEE share schemes don't actually understand a lot of the data and the information that is put out there. So I think there's still a lot of work that can be done. I know quite a number of companies have done a lot of work. The likes of Yeboyet, who have done a lot of roadshows. Sasol and Zalo did a lot of roadshows, but there's still a lot that can be done to encourage more inclusivity and more trading from the general public. I think there is still quite a huge number of people that can participate in these broad-based schemes, especially when you look at the number of people that participate in various other investment platforms there is still lots of room for people to participate. I mean, when you look at the Stokvels, the numbers in the Stokvels are quite amazing. And we need to bring these people into the equity market to participate in these BEE share schemes.
Okay, so Busi, on that premise then, if we start with the basics here, what is a BEE share scheme and how exactly does it work? One of the things that stands out immediately, and Samira touched on it right at the top, is that you get a BEE share at a discount compared to ordinary shares. And of course, that's initially the big appeal.
Yes, so the BE schemes is a restricted investment scheme because it's particularly targeted at previously disadvantaged individual South African, and it is at a discount because it's giving access to an opportunity to own a share in a company. So the underlying company, the investment in the underlying company is you get an opportunity to do that, but also through an exchange. So through through an exchange that is able to be accessible, which was not previously accessible to previously disadvantaged. So it gives an opportunity to grow your investment if you hold on to the share, but also it provides an opportunity to earn a dividend over that period of time. So it allows those who are not previously able to own a share in a company an opportunity to introduce themselves into that investment sort of scheme, into that investment way of investing, yes.
Busi, before I let go of this back to basics narrative completely, and I know this may seem like a very simplistic question, but who qualifies?
It's previously disadvantaged. South Africans, as they are defined, because it is a BE scheme, as they are defined within the BE Act. So Africans, Black, Indians, that previously, and also broad-based, anyone falling within that category would be able to invest in the BE shares. And that gets verified in terms of that. Yes.
Absolutely. And that an important thing to highlight, that there is a verification process that comes hand in hand with these applications. Lucy, once you have ticked all the right boxes at the end of the day, the associated jargon can be intimidating. And Hartwell touched on this, especially when the terminology that you're looking at is something like lock-in period. In fact, that's one of the first terms that you hear, right, if you decide that you do want to subscribe to one of these BEE share schemes. So where companies usually speak of a lock-in period when issuing share schemes, what does this mean for the recipient?
Thanks, Alicia. Yeah, this definitely means to just give enough time for the curve. And I mean, equity vesting is not an overnight, but a long-term opportunity to create the real value. If I can just, like, from my experience with our previous SAV Zenzele scheme, we had like a 10 years lock-in period. And in that 10 years, we actually paid almost 4 billion in dividends. And then we created 9.7 billion rand for our 40,000 shareholders that we paid at the end of the transaction, which was like in April 2020. And with the current SAV Zenzele scheme, which is, yes, it is an evergreen, meaning there is no ending period for the public to buy in, we still have a lock-in period of 5 years only for our employees. And there's no capital that actually being paid by the employees. And then this, again, is to enable the true value growth for our employees. And then this meaning, like, after 5 years, with the after 5 years, our employees will be able to trade like 20% of like their shares, and then they can do that year on year until 2031, which is basically still like a 10 years lock-in period, but more with like some luxation after 5 years. So with lock-in period, yes, it might be seen somehow, but I think that is the only way that you can actually realize the true value.
Yeah, you touched on the SAB Zenzele scheme there, but SAB extending now things and moving to a new scheme, and that the SAB Zenzele Kabili. So why that decision to launch a new scheme? It doesn't necessarily bring new players, Lucy, into the fray.
It does actually bring the new players into the play now, because initially with our SAB Zenzele, there were some qualifying criteria. It was just not only BE, as Busi explained it earlier, but it was only for our qualifying customers, like retailers. So we had to hold a liquor license for you to be able to buy in. But with SABs and Zelekabele, it is open to the public. So our consumers are also included now in the SABs and Zelekabele. And then again, it will still be through the process of verification before they can actually be able to buy in into SABs and Zelekabele. So that's the difference, and some learnings that we had from the previous scheme that we can actually take over, and then some that we have learned like not to carry over to the new scheme. So yeah.
Okay. Before I bring things back to Hartwell, Samira, a quick question to you that's actually come in from a viewer this afternoon. What is a typical discount of a BEE share compared to an ordinary share?
I think your BE discount can range between 30 to 60%, honestly. So there is no set amount. Every BE scheme is different. There are other factors as well. So it's not just a discount. It's the amount of debt that's sitting in that scheme. And I think that's where the benefit, as Lucy pointed out, of a lock-in period is it gives the company that opportunity to drill down on that debt, to reduce it as much as possible, so that when we are open and you are allowed to trade in it, you are trading a share that is closer to its net asset value. So BE scheme, discounts can range, and it's really relevant to that share scheme itself.
Okay, so with that context and a foundation laid then, Hartwell, what generally happens after a lock-in period ends? So when these shares vest, what are the options that investors have at their disposal?
So shareholders really have an option to either sell their shares or they can basically keep their shares. And I think quite a lot of the companies would like to encourage shareholders to remain as shareholders and keep their shares. And you obviously also have the opportunity to transfer those shares to the rest of your family if you should so wish. But I think it's important that as an investment, you need to grow that investment. So the idea is to try and take advantage of the opportunity that you can now add onto those shares that you initially bought at the beginning of the scheme. You can continue to add on to those shares on a monthly basis, because I think we come from a background where we've run a lot of stokvels, and with stokvels you put in money and at some point you take it out. So we need to be changing that mindset as investors to say we want to see our investments growing. So the idea would be to try and grow whatever portfolio you've built and purchase additional shares, because as you hold more shares, the dividends start to that you start to benefit from, the funding starts to get better. Obviously, if I'm holding 100 shares and someone is holding 10,000 shares, the person who's holding 10,000 shares will see a higher value when they receive dividends, because the dividends are calculated per share. So it's important that we encourage our investors to try and grow their portfolio and get additional shares.
Okay, so Samira, we've got Hartwell there just homing in on the fact that the ideal position is to hold, right? If I choose to keep my shares, what do I then do with them? Is it a simple case of sit and hold?
Not necessarily, right? So you can hold your shares if you want them for investment purposes. But I think Hartwell touched on a very important point again, where you want to grow your investment, right? So once this share is trading, it is on an exchange, you have the opportunity to do so. You can go and buy more shares. You can increase your investment as much as you want. You can trade actively in that share. So get involved with learning, understanding the underlying investment that you have, see when there's activity happening, take note of when dividends are being declared, and just get more and more involved in these schemes. The education aspect was touched on, and I think we put a lot of effort into trying to educate our shareholders and trying to make all of this financial info very easy and understandable to all our shareholders. So make use of all these opportunities. So not necessarily just through roadshows. We release results twice a year. You have your annual general meetings, there are shareholder information sessions. There's lots happening out there. Just, I think, participate more actively in your share, either through holding or expanding it by buying more shares.
Yeah. Busi, let's drill into some more detail as far as being an active shareholder is concerned. What are some of the responsibilities as a now shareholder?
Yes, the responsibilities are really to look after investment and always be curious as to how is it performing, because the performance of the investment in a BE scheme really depends on the underlying company that is there. In the case of Yebo Yethu, for example, it's dependent on the performance of Vodacom. So one of the things that are important, which Samira has touched on, is to be able to spend the time to actually look at the announcement of the results, try and understand the information session as well. So as a shareholder, the responsibility is really to look after investment, but also from a more managing your own investment is also to make sure that you update your details, you continuously update your banking details, your cell phone details, and all your contact details that are there, because we do find sometimes that shareholders have invested money they have earned in the share scheme. They are now due, the dividends have been declared and due to and are paid, and we find that you don't actually get hold of the shareholders, because the details have changed. So I would really want to encourage shareholders to, investors to really take the responsibility to make sure they are up to date with those details, because these dividends are due to them. They've made an investment, and the dividends are rightfully theirs. So those are some of the responsibilities that they have, to be active and to attend the various events about the company and to read the information.
There's an argument out there, Busi, that black people must not only own a part of an entity, but must also have voting rights. There has to be a monitoring of whether, those recipients actually received an economic interest that's commensurate to their shareholding. What do you make of that argument that's out there and the kind of evolution that we potentially see moving forward?
I mean, that argument is quite appropriate, because the share allows you, in a case of a company, to have a voting right, to own a share, and also have a voting right. So when you go to the AGMs, that is when you exercise that voting right, as a shareholder. And I think it is incumbent upon sort of the shareholders, I think the education part of it, to know that they can attend an AGM and they can exercise their vote on the items that are being voted on, because it should be a true empowerment. And a shareholder in any company has a voting right. Similarly to this scheme, a shareholder, there's an AGM, they can come in and vote on whatever the decisions are put forward to them. Yes.
Lucy, I highlight this point because, we see these BEE share schemes largely as a positive. They've been seen as good investment vehicles, whether we're looking at them from an investment return perspective or from the perspective of helping drive the transformation agenda in South Africa, right? But they've also come under scrutiny, and we've had the broad-based BEE commissioner not so long ago highlight how a scheme failed or fell short of meeting the objectives that are outlined by the Empowerment Act due to a number of restrictions that have been placed on shareholders. Is there any merit to that? Are restrictions a bit too onerous?
I think things are getting much better now. I think we are really trying with the education, Hadwa mentioned. I think the more education can actually give out there to the public, just understand how the BE scheme works, that could really help. Just again, I think the point that Busi made in terms of keeping your details, for example, up to date. Also, simply disclosing, I think our people need to disclose it to their family members as well, because we had a lot of shareholders now that were actually struggling to pay the dividends, for example, because of they might have passed away since then they had shares, and then no one seems to know from their families. So the disclosure, that I think is quite also important. Just try to tell someone within your family. It is important also to put them in your will, but one of the things, if you fail to put it in your will, just try to disclose it to your family as well. So yeah, with education, that is we planned to have for our shareholders, that is continuing. I think a lot of restrictions, people will start to understand them, why they are there, and then why they are important, and then maybe some of the restrictions are not so important, and then they can actually get done with.
Yeah.
Thank you.
Lucy, on the other side of the coin here, if I choose to sell my shares, how do I go about doing this?
If you choose to sell your shares, we really would like you to be your owner. But at the end of the day, the choice is yours. Even now, you decide, like, you know what, this is now the end of game. I feel like I want to sell my shares. This is a very, very simple process. I think with the services from JIS, you can just pick up a call, just talk to the call center. They should be able to direct you and help you with selling your shares.
Yeah, there are different kinds of investors that we're looking at here, Hartwell, in terms of how they've been roped in or brought in to this BEE share scheme exposure. And I want to ask you, if you stood as a benefactor of a company share scheme, what happens when that benefactor leaves a company, for example? And I guess it's tied to a question that's come through from one of our online viewers this afternoon as well. Is there any research into how BEE share ownership aids key employee retention at the end of the day?
Well, look, in generally, share schemes are a retention schemes as well, because within the share scheme, there are rules that govern that particular employee share scheme. So, for example, some of these share schemes will say if you retire, you retain your shares. If you resign, you actually forfeit your shares. So obviously, as an employee, I wouldn't want to forfeit my shares, especially when you see that, for example, there's a lock-in period of 5 years. You are now on year 4, and you are deciding to leave the company. But you need to weigh up the benefits of staying on with the company so that you can benefit from your shares when they do vest to you. So they do work as a mechanism to retain employees. However, all these share schemes have got different rules so that each employee is well aware of what the repercussions of leaving the company before the lock-in period is up. So yes, we believe that they do act as a good retention mechanism for employees. Not so much, obviously, in the general public. It doesn't really matter because you will always retain your shares no matter whatever happens. You do not have to be linked with that particular company to participate as a general public member. But for employees, it's very important that you understand and you also constantly follow up with whoever is administering those shares so that you also understand what is in it for you, what is the benefit of the employee share scheme.
Yeah. Samira, it's interesting because when I was doing research for this discussion, I picked up a note with Trade and Industry and Competition Minister Ibrahim Patel, highlighting that more than 150,000 South African workers have benefited from 100 billion rand in wealth transferred through employee share ownership schemes. How big a deal is that? I mean, when you look at the numbers on a headline basis, they certainly seem impressive, right? But what's your perspective on the kind of traction it's actually gaining?
No, definitely. I think these ESOP schemes are very useful in a number of points, right? It serves its retention purposes, but also you're starting from home, right? So the company itself gives its staff and its employees the opportunity to also participate and owning a part of that company through its BEE investment vehicle. So, stats like that are very good to note, and I think these are also not going to go away anytime in the near future.
Yeah. Well, do you have anything to add to that, Busi?
Yeah, I think, like Samira said, it's about empowering your employees as well. And in addition to the normal sort of share schemes that may be there within the remuneration, this is in addition to empowering a certain group of employees within the company. Yeah. And it does serve as a retention, certainly for employees, but also it starts them to again grow their investment even post that, because then they'll be available they now can buy other schemes that are listed and begin to grow their investment within the BE space and not only be limited to the employee share scheme, which is good because one of my colleagues as well in the panel spoke about growing your investment and owning more of the shares. And I think that would assist employees as well as a starting point.
We've explored some of the options that beneficiaries have at their disposal when that vesting period comes to the fore. What are some of the tax implications that one would have to consider when it comes to either keeping or selling your shares?
Yeah, so if you're selling the shares, capital gains tax would apply. If you're keeping your shares, you will be receiving dividends, and those dividends are also subject, to some tax which the company paying needs to withhold. So there are tax implications, and people can sort of approach some form of a tax person and their tax advisor on how they will specifically impact their cash flow.
Yeah.
But certainly there is, because where the benefit is received, there is a taxation that applies. Yeah.
Lucy, I'm going to throw a viewer question to you now. If the process to open trading accounts that offer the BEE contract was easier and more streamlined, you'd have a lot more investors actually participating. It's more a comment than a question, but the question that we derive from that is, do you agree? And how much more of a streamlining do we need to start seeing happen here?
I agree. Because, with, for example, our STBs in Zelekabele, there are platforms now that actually one can use to buy these shares. Being computer shares is one of them, and then obviously they will be able to verify you as well. And then we also have an arrangement with Easy Equities. I think most of the people now are aware of the Easy Equities app, where they can just download the app and then be able to access all these type of shares. And then STBs and Zelekabele is also on their platform. You'll also still get verified to make sure that you qualify those to buy those shares. Yeah.
Okay. And before I let you go, can non-listed companies list their BEE share schemes on the JSE?
They are non-listed. So I think there is an opportunity. If the companies feel like, obviously, it will be approaching the JSE and just to find out all the requirements for one to be able to list on the platform. So I think anyone who really feels like they want is merely getting in contact with the JSE and then finding out exactly what will be the requirements for such company to be listed on their platform.
Okay. Well, some homework to do there. Samira, what kind of activity do you see when it comes to the selling of these shares? Liquidity within this space has proven to be very limited, to say the least. And from that, one gets a sense that people, buy more so into the hype, like Hartwell highlighted at the beginning, get themselves in, and then don't actually execute or necessarily explore some of the trading optionality that comes with it.
Yeah, liquidity is a huge issue in all these schemes, and it's usually because of the long lock-in periods where shareholders usually forget that they are shareholders in these schemes. Liquidity can be addressed through a number of different pain points, right? So the education, I think, is very, very important, both from the company side and the shareholder side. Take the time to know your investment and to participate in all the media and the activity that's out there. Likewise, on the company side, take the effort to educate your shareholders, right? So if you are not publishing results regularly, put up information booklets, videos, anything, information sessions with your shareholders just to keep them involved, communicate with them through emails and SMS and just be engaged with your shareholder. But education is one part of it. The other thing is that historically, trading is seen as this, it's trading. We don't know how to do it and we don't know what to do. And I think BE schemes have taken a lot of effort in trying to bridge that gap. So Lucy spoke about trading through your call centers, right? So you don't need to be digitally astute and know how to work an app and go and appoint your own broker, right? We have appointed preferred brokers for you, which are there in the background. You can simply call a call center and speak to an agent and get this done. If you are more astute with these things, we have the website optionality. we are trying to streamline process as well to make it easier for people. We are now living in this digital lockdown world. And so we've taken a lot of time to try and streamline our FICA requirements, where you don't have to go into a bank to certify a document. You don't have to go into Home Affairs, all of those things. So a lot of work is being done, and all of these things together will start over time to stimulate liquidity and create that more active shareholder. But it takes work, I think, from all sides.
Yeah, you touched on some of the work that needs to be done. Do restrictions like time locking and the fact that you can only sell your shares to other previously disadvantaged individuals affect their value negatively and some of that liquidity potential as well?
Yes and no. More no, because we are empowered through these exchanges that are specifically catered for the BE world. So on the JSE, we have the BE empowerment segment, and there are more and more schemes coming onto there. And so it's not for you to go and look for your seller or your buyer. These are available for you in this exchange that is out there. We have a number of exchanges though out there, and if you we have other mechanisms. So if you don't want to go through an exchange, you can do transfers. Hartwell spoke about it, where you want to give your children your shares, or those sort of things. So there is a lot of different ways of trading your shares, and I don't think it's hampering in any way. We have the means and the ways of doing this available to us.
Yeah. Busi, let's provide a bit of a lesson here, if we can, right? What does someone buying need to know when it comes to getting involved in this space? Because the participation has to come with a degree of understanding of the share price, some consideration of the company, because that's the underlying asset that you're buying into, and some of that growth potential it offers, surely, which comes hand in hand with risk at the end of the day.
Yes, absolutely. I mean, the people need to consider the underlying investment. You are buying into a company that has a certain performance, possibly at the time of buying, but it also goes through cycles of economic slowdown and also growing faster and sometimes slowing down. All of that is embedded in an investment that you are actually making. So it becomes quite important that somebody does do some work to find out about the company, the underlying investment they are investing in. But also, you can also approach your financial advisor if at all you are not, able to, understand that a financial advisor, or to actually, advise you to whether it is a good investment or not. I mean, each one of us as the BE schemes would like our shares to be bought, but for the investor, they have to actually do their homework to say, is this the right investment for them for what they need? And it's important that they do visit the website and also speak to a financial advisor if they can access one to find out about the company. There is a risk involved.
Absolutely.
There
like
is
with
definitely,
anything,
like
right?
with anything, it's not a guaranteed sort of investment that you'll always make money. But certainly, each company obviously is working towards making profits and making sure its shareholders are well rewarded.
So, Lucy, while we're on the topic of risks, then, these schemes are launched, yes, at a deep discount, offering deep value. The investments don't come without risk, and we've got to highlight that, I guess, quite emphatically. So what are some of the risks that investors have to be aware of here? I mean, first and foremost, it doesn't mean that a discount, because you get something at a discount, you still can't lose to market forces at the end of the day.
Yeah, no, 100%. I mean, I think I like Busi's point. I mean, investors need to do their homework as well. So yes, it is good. The information is out there for the companies. I think Google is becoming our friend lately, where one can get all this information on these companies. For you, before you can actually decide, I want to invest this much in this particular company, financial statements are available. I mean, one just has to do their homework and then just to check and make sure that they're not getting themselves into something that they might not actually benefit anything out of it, or are they getting themselves into something that they will be able to benefit on it. So doing the homework, asking questions, ask around, to make sure that you understand what you're getting yourself into is quite important.
Yeah. Sticking to that line of conversation, Hartwell, Zekele Futhi was a disaster. Would it be fair to say that some of these BEE share schemes actually backfired, inadvertently causing more frustration for beneficiaries?
Yes, look, not all the BEE schemes have been very successful. Some of the schemes have had challenges. And that becomes a bit of a negative image out there in the market. But I think largely quite a lot of the BEE schemes have been quite successful. And I think just going back to the point of what the other panelists have been saying, that shareholders also need to take a risk and also do their homework to make sure that whatever they're getting involved in, they're comfortable. Because I think there's nobody who can sit here and tell you that, come 10 years' time, this BE scheme is going to be successful. I think the intention of all these BE schemes is always very good, because they want to pass on some shareholding onto previously disadvantaged people. But, market forces, unfortunately, sometimes don't work the way we want them to. So that should not be something that becomes a bad image for the entire industry. I think when you look at, quite a lot of the share schemes that we have at the moment, looking at just, for example, SAV Zenzele, if you had gone in, at listing now in May at 40 Rand, they're trading at about 80 now. You would have made, you would be in the money at this particular point in time. Year 2 at the beginning of the year was at 35 Rand. And now it's at about 51 Rand, just over 51 Rand. So there is value in these share schemes, not only for those who want to go in for a short time, but also for those that are going in for the long term.
Yeah. Hartwell, what are some of the key questions that an investor would need to ask going into this space? Because ultimately, as we've been highlighting up to this point, the investment outlook and the return on the investment is very much dependent on the performance of that underlying asset over the long term.
Yes, I think that underlying asset is very, very, very important, because if you are putting your hard-earned money into any investment, you need to almost be comfortable that, look, I'm investing in a company that has got history, a company that is doing well financially, and a company that is forward-looking. So, as an investor, you really need to be able to do your homework and just find out where is this company going, and attending your AGMs and attending your results presentations. And also reading up, because I think we tend to give the responsibility too much to the issuers or the companies that are issuing these shares. But as investors, we need to take time to today there's online platforms. We need to go onto these online platforms and be able to read up about the companies that we're investing in. And normally all these announcements that are done that affect companies, they are released on the SENS results announcement by the JSE. So you are always aware of what is taking place, and articles are written. And I think, a lot of us as previously disadvantaged shareholders, we need to start taking an active role in reading up about the companies that we've invested in, because therein we will find that information that we're looking for. Yes, not all of us are very well versed in reading financial reports. They're not easy, they are quite difficult. But in a lot of cases, there are financial reporters who actually break down this information and put it in a format that a lot of us can then understand. So we need to be able to take advantage of these articles that are being written in various, whether it's an online or it's your publications, any of the publications. They do have a lot of information about all these listed entities. And if you look for this information, you will find it. It's not hidden.
Yeah. Because Samira, if you don't go on that hunt and a bit of an expedition, it begs the question: are assumptions that are made about the future of share prices reasonable? Because you go in with a certain expectation, and that's an expectation that's not necessarily fulfilled at the end of the day.
Yeah, no, definitely. You have to you have to get involved. You have to educate yourself. You have to understand what's out there. But we've made it easier for our BEE investor. We've broken down the financial information for you as far as we can to make it more understandable. We have things like simplified net asset value calculations, just so you understand the value of what you're owning. And so we're meeting you halfway. So it's not for you to go and do all the work. It's out there. Keep your information up to date. Receive everything that we're giving to you, and then digest it on your own.
I asked a question because a viewer's written in: how should I best time the buying or selling of shares, and are there costs involved? Can you time these things?
Yes and no. So I think there's a bit of financial education that you can do around that. As with any share, I mean, generally around when the results are being released, or if you know a dividend is going to be declared, you've got to see the historic trend of how that company responds to those type of announcements, and then you react accordingly. The costs are all transparent. They're all available with any scheme. You can know upfront what you're going to get involved with when you're trading, either buying or selling.
Yeah. They may be transparent. How complex are they, though? Because that's what as often sees investors stand back, is that they're just too intimidated by what they're looking at.
Not complicated at all. I think Busi touched at some of the tax consequences and stuff, but it's not for you to go and calculate your securities transfer tax or your CGT implications. We have calculators available. If you're doing it through the call center, ask them what are going to be the costs involved before I do this transaction, and they'll do this little snippet for you and give it to you. So not complicated at all. You don't need to be financial wizards to be able to trade.
Yeah. When it comes to the structure of these schemes, though, I mean, how much of an evolution are we looking at there? And is there quite a road ahead in terms of what those BEE structures look like at the end of the day?
I think there's always an evolution that can come up, because BE is here to stay, and the more people know of the opportunity to invest in BE schemes, and I think the more of them will be needed, and also like with any, I mean, prior to 2000, BE was happening and they were not listed, and then it became clear that people need to open up the BE shareholding to ordinary people. You don't need to be part of a certain company or to be part of a consortium or to be in a big group in order to be able to invest. You can invest as an individual. I think the more it looks similar to the rest of how the market works, the better the volumes of people that are going to be. One of the panelists spoke to about the number of people in stock files. If at all one can start gaining more and more people within the BE space, there will be evolution in terms of structures with what companies can do naturally, because there'll be various ways of how people can participate, like with any investment in financial instruments. I think it could evolve.
I guess, Lucy, I may have put the cart before the horse there, but what are some of the structural challenges, in your view, within BE share schemes that are worth noting?
Yeah, well, some of the structurals that I can think of, that, I mean, again, it goes back to understanding. I mean, I think I like what Samira said, that like those financials are not really that difficult for one to understand. Like, for example, if you're trying to sell your shares, like knowing exactly how much is going to be the cost that is going to go towards that is like quite an easy process that I think anyone can actually be able to understand easily and decide based on that whether you can go ahead and sell or just not sell. So I think it is quite an easy process for one to understand as long as you try to be involved. And then remember, once you are now a shareholder, meaning that you are now an owner, you've got the interest now in this company. So it is quite important for you to understand and do some learning just to know the company exactly, because now you're a shareholder, you will be able to attend things like AGM and yes, be able to vote in AGMs, and you will like somehow feel like a little bit of decision making of running this organization now that you are now the shareholder of.
Yeah. Hartwell, an interesting question that's popped up here. Being operational in the company, is there a potential danger of insider trading by senior executives?
Well, there is, but however, there are mechanisms within all companies to make sure that your senior companies that get this information upfront do not get themselves involved in insider trading. I think in the past we've had not many, but we've had situations where people have been found guilty of insider trading. But in general, all companies will not allow a senior executive to trade without going through various processes. So there are various sign-off processes. So, for example, if the chief financial officer wanted to trade his shares, they wouldn't be allowed to just go and do that trade in the middle of the night by themselves. They would first have to get permission from the company secretary to do so. And obviously, the company secretary also checks to see, are we in a closed period, or is it open for this executive to sell? Is there something happening within the company that is confidential, that is going to go out into the market, that will give him an unfair advantage? So all these processes are there within all these companies to make sure that executives do not get an unfair advantage over the general public. So transparency is obviously very, very important when it comes to listed entities.
Hartwell, what are some of the schemes that are available to now buy into?
So apart from your SAB Zenzele, you've got Yeboyetu, there's MTN Zakele Futi, there's Putumanati, which is quite an old scheme. It's being managed by Equity Express. There's also, at the moment, Baloworld Kula Sizwe is under a lock-in period, so there isn't any active trading there. So those are some of the schemes. There is also Ukamba Holdings, which is linked to Imperial Holdings. It's available for investors to buy into. So there is quite a number of BEE schemes in the market, and we hope that going forward, more and more of these schemes will list so that the shares are available in the market for everyone to purchase. I know JSE Investor Services is also looking after Saso Kanisa. Those are available to the market for those that are interested. So there is quite a lot of activity in the market, and we hope that going forward and into the future, we should see more and more of these PE schemes, so that there's a bit more variety and our investors have got more of a choice when they go out into the market.
Absolutely. So let's keep things simple, because a comment that's come through, this is so informative now that the panelists have simplified all the terminology, and it's the jargon and it's the complexity that often deters investors from even venturing into this space. So where can someone who's interested buy BEE shares?
Okay, so I think your first point of contact is to go to that company's website. You will then find details of their call centers, their trading websites, all the supporting documentation that you need. These days, most people have smartphones. All our websites are mobile friendly. Go in there, read up, and just get a phone number, and call our call centers. You can also contact the JSE Investor Services directly or the JSE, and they will put you in contact with the necessary call centers.
Yeah. Busi, bottom line, is it a good investment? What kind of track record are we looking at when it comes to the kind of value that has been created for people who have delved in?
Yes, like the other panelists have said, there are good investments and good return that has been realized by the shareholders in terms of the dividends, which in some of the schemes, for example, the dividends has even been more than what they invested over sort of the lock-in period. And when there was a lock-in period and the rollover, in some schemes have even paid a special dividend to those investors. So the longer you stay on to the investment and you are still comfortable with that company, you know, the return will be there. Like we said before, not all of them have been, you know, have a good return, and it is up to that risk again that that each investor needs to evaluate. But it's certainly an investment portfolio that one should actually explore, because there has been quite a lot of economic benefit and financial benefit for investors.
Well, we're going to start wrapping this conversation up pretty soon. So, Lucy, any closing commentary from your side and any points that you really want to highlight at this point before we wrap things up?
Yeah, well, thank you so much. Definitely it is like, well, not being a financial advisor, but yeah, it is not such a bad investment. And then again, yeah, long term, like keep it minimum 5 years, and then ideally 10 years if you can. And then again, it's like knowing exactly when to get in and when to get out. So yeah, company had created an opportunity for people to become shareholders through their BE scheme. So let's become some kind of shareholders. Let's be the owner. Let's invest wherever that we can. Let's do our homework and be sure of what we are getting ourselves into. And then, yes, SAB Zenzele Galil is trading is out there for you while you're consuming SAB products to be the owner at the same time. Thank you.
Well, on that note, we're going to leave the conversation there. Thank you all for having joined us. This past hour has provided us with a lot of information to digest. If you still have questions, we're going to be posting the JIS call center number in the live chat right at the end. So if you need access to, that kind of expertise, be on the lookout for that. And for those of you who've logged in, I hope that we have managed to provide some insight and greater understanding into what a BEE share scheme is and how it works. I'd like to thank our guests all for having joined us today, sharing their expertise as far as the ins and outs of investing in BEE share schemes are concerned. Hartwell Tuma, he's Employee Share Ownership Program Head at William Radcliffe. Lucy Mofokeng, who's Share Schemes Coordinator at AB InBev, and both of those joining us remotely this afternoon. With me right here on the platform, Samira Khan, who's Company Secretary at Yebo Yethu, and Yebo Yethu's Busi Siwalyana, who serves as Chairman of the Audit Committee as well. It's been an absolute pleasure hosting you this afternoon. From me, Alishia Seckam, it's goodbye for now.
Thank you.
Thank you.
Bye.